Hello and welcome to NDTV Profit. You're watching the SME IPO Adda, and my company in focus is Danish Powers. The company's IPO is opening on October 22nd, closes on October 24th, price between 360 to 380 rupees per share. The company is raising nearly 200 crores, 197.9 crores to be precise, and all in fresh issue. And the company is valued at a little over 748 crores at the upper end of the price band. And joining me today is Sihvam Talwar, Managing Director of the company. And Sihvam, to begin with, give us a sense of what your company does and what kind of products do you manufacture?
Firstly, thank you so much for having me over here. So we are Danish Power Limited. We are a manufacturing company based in Jaipur, Rajasthan. We are into manufacturing of transformers, and along with that, our other division is panels and automation. So both of these product divisions are catering to the power sector, and largely we are, in last few years, our major focus is in the renewable energy sector.
You know, I was looking at your numbers and I was a little surprised why you haven't come to the main board and you're coming through SME. You know, from a financial point of view, last 3 years financials, you are profitable. The top line for FY24 was roughly around 332 crores, which is as good as some of the main board companies. And profitability is around 38 crores for FY24. And in Q1, you had revenues of 72 crores and a 10.4 crores of PAT. Why did you choose the SME IPO platform and not the main board?
See, as a company, we have obviously moved out of SME now. Prior to that, we were definitely in that as an SME only, since we were under the 250 crores turnover range. With regards to the IPO, see, we are new to the capital market. As a company, we are growing and we wanted to take a cautious approach. That's how we've always been in our journey for the last 40 years. We believe in a steady approach, step-by-step approach, and therefore, we thought that since we are eligible for both, we chose SME to begin with, and hopefully gradually make our way through ahead.
Also, give me a sense of your fundraise. You're raising nearly 198 crores. What is the purpose of this fundraise?
So largely the purpose is towards expansion of our manufacturing facilities and the working capital that we would be needing to make sure that we are able to execute the expanded capacity that we are putting in, because in our industry, working capital is a key sector. So most of the funds are going towards capex expansion. We are expanding into 2 more manufacturing facilities in our existing area, and the balance is for the working capital.
So you have 2 manufacturing facilities as of today in Jaipur, which is one of them in Mahindra city as well, if I'm not wrong.
Right.
And what is the new 2 lines of facilities or manufacturing lines that you're coming up with?
So our older facility is in Sitapur Industrial Area in Jaipur. The newer facility, which got started in November 2022, is in Mahindra World City, Jaipur. It's an upcoming zone in Jaipur area. We've taken another parcel of land in the same industrial area, and in fact, it is adjoining to our existing facility. And in the previous facility also that we had separate land parcel available. So that is the 2 phases of expansion that we are doing, but it's going to be in the same adjoining land. So ultimately, we'll accumulate into one setup so that the ease of managing the whole process is much better.
Now, any particular information on the kind of manufacturing line that you're setting up? What products are you looking at, or is it an extension of the existing product line?
See, largely our strengths have been in the transformer industry. We focus a lot more on the transformers specifically made for the renewable energy market. But to be honest, we don't want to stick to just one line of product range. We are already into other types of transformers, such as distribution transformers, power transformers, transformers for rectifier applications, and a few more. So our capacity expansion is lined up in multiple places. Power transformers is one segment, continuing on our existing transformer base for renewable energy, as well as distribution transformers as well. So it is a combination that we are going ahead with to make sure we have a healthy balance across different applications of transformers.
I was looking at your customer profile, Wari Energy, Tata Power Solar, ABB, Torrent Power, and some others, some of the marquee names who are involved in the power sector and renewable sector. What is the kind of order book that you have, and can you give us an idea of how this sector is now performing with respect to demand coming in? Because we have a huge target with respect to reaching a renewable, and as you go into implementation, more and more inverter transformers are required.
Correct. So, see, definitely first part of your question, customer base is something we are what we are because of our customers. We thank them for having their trust in us, and we've reposed their faith, and we are getting continuous business from them. Secondly, in terms of our order book, we are having more than 370 crores of orders in hand as on today, and this is further planned for execution in the coming months. Third, the industry looks on a very positive side, and that is entirely the reason we are going for this growth and expansion. We are seeing that in terms of the renewable energy targets that the government of India has set in, there is a substantial investment that would be coming in the power sector. And once this kind of energy generation is done, the same kind of investments would be required in the transmission and distribution segment as well. All these three places, transformers and panels, both are a regular requirement in the product segment. So we are very confident of the coming times for the next 3 to 5 years or more in the power sector.
I want to just spend some time on your financials, because between FY23 and FY24, there was a huge jump in revenues and profitability. And I assume that that's primarily because your second facility came into operations. How is the second facility doing, and have you, in terms of capacity utilization, is it fully utilized, or there's still headroom to that facility?
So yes, the major reason has been one, the new facility that was started up. This is a much advanced state-of-art infrastructure facility that we developed, which meant we could execute large volume of orders. We could execute orders from certain type of customers who had a certain benchmark with regards to what kind of vendors they allow their products to supply. So we were able to clear those kind of difficult client audits and get to that better level of margins as well with those niche customers. In terms of utilization, last year our utilization was about 82% on an average year-long basis. This is how typically a transport industry works. Usually the first few months are on a slower side, and the last 6 months are on a much higher side. So average utilization is around 82% is what we are currently running at.
So there is a lumpiness in the revenues. That's what you're saying, that a large part of the revenues come in towards the last 6 to 8 months. Is that what you're saying?
Yes, that's how typically the industry has been working on for last many years. I mean, I've been in this industry for over 17 years now, and that's the trend that we've usually seen. A few reasons are that a lot of these installations in power generation plants, or especially renewable energy, is in remote sites and locations where if the weather season, like the rainy season, there is literally no work that's happening, and therefore the clients usually tend to take the goods once the rainy season is over. B, in terms of the financial cycle, how the funds are allocated to a project. Usually the budget utilization is done in the second end of the year. So typically first few months are usually slow. However, we are looking into options how we can more evenly distribute our sales going future.
And the new expansion that you're looking at, which is non-renewable in nature, will that help diversification of your revenues and profitability as well?
So the new expansion is a combination, as I mentioned. So definitely we want to keep a healthy mix of all our products. So even in transformers, there are different types, and we want to keep a healthy mix to see we are not just doing renewables, we are doing the conventional power transmission distribution as well.
I was looking at your margins. It was 16.8% in FY24, and these are core margins without other income. And in Q1, it was around 21%. Is this margin hike in a sustainable one, or is it a quarterly thing which is coming into play?
See, as a company, we are committed to sustainable growth. We are committed. Obviously, the main margin would come up as on year-on-year basis. Any other figures, as you understand, we are in the silent period right now. We cannot comment.
I understand.
Yeah.
What I'm trying to ask you is that what is a normalized level of margins in this business?
So again, it's a wide industry. Different type of manufacturers cater to different industries, different type of products, and therefore you see a variety in that range. I can comment specifically about my industry and what we are looking forward. So the margin that we have posted last year is something we feel are sustainable, and going forward, we aim to keep in similar lines of margin.
What is the typical working capital requirement that you have today? And if you can tell us the total, what is the total borrowing that you have on your books today?
So the total borrowing, as we have mentioned in the RHP, is approximately 20 plus for around 20, 24, 25 crores of total borrowings that's available on the books as of now.
And my understanding is that you're going to use 85 crores in working capital, right?
Yes.
So, which basically means that we are looking at an exponential level of revenue here, or the order book which is going to come into play, and that's why you are factoring in a good amount of working capital going forward.
Definitely. See, our capacity, as we have stated in the RHP, is going to cross 8,000 MVA per annum, which means a substantial increase in the production levels at our company, and therefore we will need good working capital limits availability with us in order to execute those orders at a good timeline. Because one of our strengths in the industry is we are committed to a tight delivery schedule. We stick to our commitments, and once we have the required working capital, that makes things a lot more easier and faster for us.
Mm-hmm. And normally, what is the working capital days that you have in this industry?
So in particular to our in 2024 it was 73 days the working capital days for 2024. 2023 we were about 60 days.
Is there a reason why it got increased?
So definitely it's increased with regards to bit in the volume of the business. The new plant that came in, we had an earlier teething time, which also meant that we had to keep inventories ahead of time. So that was the reason for the slight increase.
And do you expect that to revert back to 60 odd days in the next couple of quarters, or by the end of this financial year?
The end of this financial year, we are expecting maybe something similar, but maybe next financial year we could see some improvements.
Okay. You're going to also repay 20 crores, so you will be almost debt free, if I'm not wrong.
Yes, yes.
What is the kind of cash flow that you expect from operations on an annual basis now that you have a scale which is there?
So see that debt we had taken was also part for the expansion capex that we recently did, and which we are going to pay off from the IPO proceeds. Sorry, I didn't get your second question.
I'm saying that what is the total cash flow from operation that we can expect?
So in terms of cash flow, as in general, for the last more than maybe 10, 15 years, we've been a positive cash flow company from our operations. And in terms of the operational activities, I think this quarter closing, as we have mentioned in the RHP, we had a cash flow of about 23.20 crores.
Okay. And you going to plow back this amount back into operations, or you will be you have a dividend policy for shareholders?
As on date, the policy is not yet in place, so that it will go back into the reserves of the company. However, going forward, we are exploring all options of a dividend policy as well.
Mhm. I just wanted to get an idea of your geographical revenue mix, because I was looking at it. In Q1, you had a more than proportion share coming in from Gujarat. I assume that's one of orders which is there. But normally, what is the kind of share of revenues coming from various geographies?
So see, because our sales have largely been coming from the renewable energy plants, which is either solar or wind power plants. Now, for India, largely Gujarat, Rajasthan, and to some extent states in the south, such as Karnataka, Tamil Nadu, have been doing much more projects as compared to the rest of the country. Since we are located in Rajasthan, a lot of developers or EPC players tend to give us we have a slight advantage in terms of the logistics and the transportation, that most of our projects are coming up in Rajasthan or Gujarat. However, we are supplying Pan India on a regular basis and even internationally as well. So, but just because how the availability of land in Gujarat and Rajasthan, the availability of the solar radiation in Rajasthan in particular, these are the few reasons why Rajasthan concentration is quite strong and will continue to be.
You've also forayed into automation, right? In from electrical point of view, substation
Yes.
automation.
Yes.
How's that business looking, and what is the kind of contribution that you see from that business?
So automation is an extension to our control and relay panel division, where we've been manufacturing panels for substations up to 400 kV. Now, with the government of India focusing more on the automation side to automate all substations, all new projects are coming as a combination of panels and automation. And a lot of older substations, augmentation work to upgrade them to automated substations is coming up. So it looks quite promising going forward. Currently, we are having a combined sales of about 10% from our substation automation and panel division. Going forward, we are looking for a healthy growth in this segment as well.
Mm-hmm. Shivam, I again come back to that question of main board. Uh, when can we see you, migrating to main board? Is there a game plan that you have in place that you will wait for a couple of years and then look at it? Because you, from an eligibility point of view, you said yourself that you are already eligible to go to the main board.
So we are quite optimistic about this journey. We definitely, that is definitely the plan. However, when is it possible? We'll need to follow what guidelines SEBI has and what is the due process for that. So that would be difficult to comment right now, but we are definitely looking forward.
Fiona, it was a pleasure talking to you today and understanding your company, Danish Power. SME IPO opening on October 22nd, closes on October 24th. Price between 360 and 380 per share. It's 197.9 crores of fresh issue, which the company is going to use for capex, working capital, and repayment of borrowings. Uh, Thank you for watching SME IPO. Thank you for joining
Thank you
us
so
today.
much. Thank you for having me here. Thank you. I appreciate it. Thanks.